Hello friends, today's topic Infosys buyback offer at rupees 1850 per share. An exclamatory mark is there, question mark also is there. Why? Let me explain after some time. In October 2022, Infosys announced its decision to do a share buyback worth rupees 9,300 crores, and that is Infosys' fourth share buyback. First one 2017 and the buyback size was 13,000 crores. Second 2019 8,260 crores. Third 2021 9,200 crores and the fourth buyback offer 2022 9,300 crores. Infosys received approval from its shareholders on 2nd December 2022. The buyback period is from 7 December 2022 to 6 June 2023. During this period, Infosys will buy its shares from the open market at a maximum price of rupees 1850 per share. Sometime back, I said exclamatory mark, question mark, because large number of people who have no idea of what is the buyback offer and what is the terms and conditions think that whatever shares they have and whatever rate they have purchased and Infosys will buy back at 1850 and thereby I will make a profit and buying the Infosys shares just now and selling it to Infosys slightly later. That is not going to happen. Kindly listen to the whole video. This means that Infosys will buy shares directly from sellers in the stock market at whatever price it is available and preferably as low as possible. If they are able to buy back shares at lower prices, they would be able to buy more shares for the amount of rupees 9,300 crores which they have allocated. Now, what is the purpose of buyback? The intention of the buyback is to use the excess money in the company to increase shareholder value for existing shareholders, to indirectly signal to shareholders and the overall market that the company feels that the shares are worth more than the current price. By buying back shares, the total available shares of the company are reduced and hence each shareholder earns more on a per share basis. For example, Infosys has almost 421 crore shares in its company. Their annual profit as on March 2022 was around 22,146 crores. Hence, per share profit earnings per share would be 22,146 divided by 421 is equal to 52.6 rupees. Infosys is planning to buy back around 5 crore shares. So when shares are bought back, the total shares of the company reduces and profit per share increases and that is called EPS. In this way, existing shareholders are benefited. Since the share buyback is being done by purchasing shares directly from the market, if shareholders of Infosys want to sell their shares, they can sell as usual in the market. If you feel the fundamentals of Infosys are strong, then you can continue to hold the shares. It is not compulsory for shareholders to sell shares in buyback. Now coming to one more topic in the video today, Indian stock markets have had relatively dull year in 2022. As of now, Nifty 50 index is 7% higher in 2022. Majority of the appreciation in Nifty has happened in the last 4 months since Nifty has gone up from around 15,300 to 18,600. In spite of dull performance, Indian markets are the best performing major stock markets in the world. The main reason for the good rally is a heavy investment by FIIs in the last few months. FIIs have invested around 85,000 crores in the last 5 months, which is the highest investment by FIIs in any major stock markets in this period. Apart from this, domestic mutual fund investors inflow through SIP has been strong at around 13,000 crores per month. Since our markets have not fallen much compared to the other markets, the valuation of the Indian market is more expensive compared to other global markets. However, unless there is some major negative news, FIIs are likely to continue investing in Indian markets, and most retail investors have largely understood that stock markets are the best option available for wealth creation, and hence some portion of their savings is being channelized to stocks. Now, current stock price from all-time high for large and mid-cap stocks listed on BSE up to 5% away from all-time high. Percentage of large cap stocks 14%, percentage of mid-cap stocks 6%. 5 to 20% away from all-time high 43 and 35% respectively. 20 to 50% away from all-time high 34 and 41%, and that is I'm talking about large cap and mid cap stocks. 50 to 75% away from all-time high 7 and 13%, and about 75% away from all-time high and large cap stocks only 2% and mid cap stocks 5%. As per data, only 5% of the total stocks are close to their all-time high in spite of Nifty and Sensex being near all-time high. In October 2021, when Nifty and Sensex had touched their all-time high, around 18% of the stocks were closer to their all-time high. So this rally has been very stock specific, and majority of the stocks have not participated in this rally. Some important events and announcements in the coming few weeks are 7th December RBI interest rate announcement, 8th December Gujarat election results announcement, 13th December US inflation data announcement, 14th December US Federal Reserve interest rate announcement. The strength of the Indian economy and the overall stability in India is making FIIs to continue to invest. We will need to wait and see what happens in the coming months when some important announcements are made and more news about the union budget starts coming. And if you found this video informative, kindly type informative in the comment section so that we will get enthused to make more and more such excellent videos for your benefit. If you are not the member of Rashtra Maharashtra channel, this is the time to subscribe, press the bell icon. Video is good, press the like button. Thank you for watching. Bye bye. All the best.